Namaskar and welcome to the weekly commodities audiocast, your go-to source for latest developments in the world of commodities. I'm your host Ravindra Rao from Kotak Securities Commodity Research Desk, and I'm thrilled to have you join us today. Global markets experienced fluctuations in risk sentiment last week while closely monitoring inflation reports from both United States and China amid escalating geopolitical tensions in the Middle East. The dollar index displayed volatility, teetering between gains and losses as market participants eagerly awaited signs of a potential moderation in US inflation, which could bolster expectations for an early Federal Reserve rate cut. However, US inflation figures surpassed expectations, leading to an immediate upturn in both the dollar index and the US Treasury yields, surpassing 102.7 and 4% respectively. On a 12-month basis, US CPI and core CPI registered increases of 3.4% and 3.9%, exceeding estimates of 3.2% and 3.8%. Despite strong inflation figures, rate cut expectations remained largely unchanged, causing the dollar to retreat below 102.2 after an initial optimistic reaction. On the commodities front, COMEX Gold prices rebounded sharply from a low of $2017 per troy ounce following the US inflation release. Despite initial volatility, gold prices ended the week flat due to a cooler than expected producer inflation print in the US, fostering speculation of earlier monetary easing by the Fed. Unexpectedly, US producer prices declined 0.1% month over month in December 2023, contrary to market projections of 0.1% rise. The yearly increase of 1% fell short of anticipated 1.3% growth. This data contradicted previous robust CPI results, instilling hope for a gradual convergence of inflation towards the Federal Reserve's target. The ongoing Middle East conflict continued to drive safe haven demand for gold, with silver also recovering, leading to marginal losses of around 0.10% by the end of the week. This week, gold will take cues from FOMC speeches and the US retail sales data. On the price action front, gold is holding the $2,000 support very strongly. We have seen prices going lower till 2017 and then recovering swiftly. On the higher side, resistance is near 2070 odd levels, and if it sustains above that, we might see prices once again trying to reach the $2,100 mark. On the MCX, 61,800 remains a good support, and on the higher side, resistance is placed near 63,000. There is a trend line resistance near 63,000. So if it goes above that, we might see a resumption of rally in prices. In case of silver, silver is holding the $23 mark very strongly. It briefly went below the $23 mark, tested 22.65, but then recovered very swiftly. Resistance is now near 23.75. If that is taken out on a closing basis, we might see prices going higher towards 24.32. On the MCX, on the lower side, support is pegged near 71,200 300 levels, which is the low registered in December. If it goes below that on a closing basis, the prices might fall towards 69,000. If not, then it might take resistance near 73,400, and if that is taken out, we might see silver prices again going higher towards 74,500 to 75,000 levels. So as of now, we expect prices to slightly be on the sideways side. Levels to focus would be 73,500 on the higher side, and on the lower side 71,200 would act as a good support. Coming to energies, WTI crude experienced a significant rebound from $70.13 per barrel to $75.25 per barrel, settling 1% higher last week near 72.68 per barrel. Strikes against Houthi targets in Yemen in response to attacks on ships in Red Sea reintroduced war risk premium. Concerns about a broader conflict in the Middle East and potential direct involvement by Iran posed threats to output and flows in a region responsible for a third of the world's crude production. Crude oil prices may remain supported amid fears of disruptions and the need for vessels to divert, especially as Saudi Arabia warned that recent actions by the US and its allies could inflame tensions. On the price front, crude oil has moved above the trend line resistance, a 3 4 month old trend line, falling trend line, and it has moved above that. But prices are not sustaining above that, and on the lower side now support is near $71. So until that holds, there is still a chance the prices might move higher, but overall we expect prices might trade in a range. On the lower side, 71 would act as a support. On the higher side, immediate resistance is near 74.21, and if that is taken out, we might see prices going higher towards 76 odd levels. In case of MCX, strong support is near 5850, 5880. It has moved out of a triangle on the higher side, but on Friday we saw prices dipping low. Uh, but until 5850, 5880 holds, there is still a chance the prices might move higher. And 6173 is the immediate resistance. Above that, we might see prices going higher towards 6340. Finally, coming to base metals, most of the metals on LME hit 1 month lows last week due to concerns about global manufacturing and construction activity, coupled with the uncertainty surrounding the Fed's interest rate outlook. Additionally, the World Bank's forecast of a third consecutive year of global growth slowdown in 2024, along with projection of China's economic growth slowing to 4.5%, added to market anxieties. This slowdown is attributed to issues in China's troubled property sector and falling consumer prices, reflecting reluctance to spend money. On the price action front, copper has dipped below the support of 712, and the next support is near 710, followed by 706. The trend line support is close to, it has closed near the trend line support of 712. So if it sustains, if we take a little buffer, if it sustains below 708, then we can say that a breakdown has happened in copper, and the prices might again start targeting 700 to 696 levels. On the flip side, if 708 support holds and if the prices move upwards, then we might see some kind of a reversal. Otherwise, the important level to watch for would be 708, 709 on the closing basis. In case of zinc, prices moved higher till 234, but once again the prices have taken resistance near the 230 mark. It is almost the third time now the price has rejected to move about 234, and the prices moved below. Still, I would say the prices are in a consolidative mode. On the upside 234, and on the downside 218 to 216 would act as a support. So until this range holds, it might trade in this broad range. On a break, we might see a clear direction in zinc prices. So looking ahead, this week markets are set to focus on upcoming US retail sales data and speeches by FOMC officials in the as the interest rate outlook remains uncertain following the latest US data. A robust performance in December's retail sales could prompt the Fed to adopt a cautious approach, potentially reducing the urgency for rate cuts. Now, this might be slightly negative for gold and silver prices. But if the retail sales comes on the lower side, then we might see gold and silver prices moving higher. Moreover, a third consecutive monthly decline in China's CPI in December raises expectations of a PBOC, that is the People's Bank of China, cutting rates on its 1 year policy loans for the first time since August. There is also speculation about a reduction in the required reserve amount for banks. The hint of deflation suggests weekly domestic demand, potentially increasing calls for stimulus, especially with key GDP and other data releases from China on the horizon. So this week, the retail sales data and the FOMC speeches will be quite important, and that might again shape up the Fed rate cut expectations. So the major commodity that will be impacted would be precious metals, that is gold and silver. Thank you for tuning in today, and we look forward to having you with us next week. Until then, happy trading.